Hey there, Brian Bogner and David Chuddick here with Parallel Financial, and we want to take the next few minutes and talk to you about this $2 trillion CARES Act and what that means for you. That's a lot of zeros here, okay? And that is what 2 trillion is. There's 100,000, a million, a billion, $2 trillion, okay? So what does this mean for you? There's a lot going on. There's a lot being printed right now. So let's go ahead and dive straight into it. All right, these are the 5 things that we're going to cover today. Probably most important that's going to affect most of you is going to be the tax rebates. There's also some good things with IRAs and 401k distribution as well. We got some unemployment things to talk about, student loans, and charitable contributions. All right, so let's go ahead and get into the what, the how, and the when, and all those good things of the tax rebate. Okay. So to get the full benefit, basically what the full benefit is here is it's a $1,200 tax rebate per person, all right? If you're married filed jointly, you can get a rebate of $2,400. You can just double the $1,200. And then for each additional child that's under the age of 17, not 17, not 18, but under 17, that's a dependent, you get $500 tax rebate as well. So some simple math here, right? If you're married with 2 kids, 2,400 plus 1,000 is $3,400 tax rebate. Single with a child, right, is 1,200 plus 500, 1,700. Pretty straightforward, but that's not all.
So Brian, do you know when that birthday cutoff is? Because I have a 16-year-old that turned 17 April 16th. So hopefully that's going by last year's age, I would hope.
I looked all over for a date cutoff, but I couldn't find it. So I don't know what that is. But you know, one thing we will be saying a lot in here is we are not tax advisors. We are not tax preparers. We're just simply trying to get some information out to you so that you can make some informed decisions, but ultimately any decision that you make or action that you take, you'll need to consult your tax advisor first, okay?
Absolutely.
So this was for the full rebate. This is kind of how it works. But here's the deal. To get the full benefit, married filing jointly, you have to make less than $150,000. If you file head of household, you have to make less than $112,500. All others, you have to make less than $75,000 to get the full benefit. Now, any amount above that is just simply reduced, the benefits reduced by $5 for every $100 of income. And this is also based on either, if you filed your 2019 tax return, then you can file for this, okay? If you haven't, you can actually use your 2018 numbers as well. Just a couple examples here on the partial. It's like a $90,000 single person with 1 child. So they make $90,000 a year. That's $15,000 above the $75,000. So if we take the full benefit, 1,200 plus the 517, but that 15,000, we have to multiply that by 5% and back out the 750. So that is actually your tax rebate that you get, $950. Okay.
Now, is there anything to your knowledge that the individuals or families need to do in order to get this, or is it just going to show up in the form of a check, or will it be put into a bank account, or what's your research telling you?
I think that is still somewhat being worked out at this point. You know, I'll be honest with you, I don't even know where you would go file for this, you know, or if there's a form. I don't even think there's a form yet or anything to actually submit at this point. The bill got signed on Friday. So my guess is there probably is something out there, but I don't have that yet. So as soon as we do have that, we'll send that out along with this as well.
But I think the main point is that help is on the way. So everybody whose income is down or even been laid off, you know, there is some help on the way, and hopefully sooner rather than later, for sure.
Exactly. One more example here, just kind of, you know, really driving the point home. If you're married, $180,000 a year, you got 2 children. So you first calculate the full benefit. That's $2,400 married jointly. $1,000 for your 2 children, that's $3,400, but you're $30,000 above the $150,000 threshold. So you multiply that 5%, that's 1,500. You got to back that out. That's $2,900 rebate that you get. Okay.
Okay.
So that is really how the tax rebate works. Again, I wish I had more. This gets back to the when and how and where do you file. We're not tax advisors. Please consult your CPA. If you're going to make a decision to do this, consult your tax prep, consult that person on how best to do it. We don't prepare taxes here. And if you don't have anyone and you need some advice or need someone, we can certainly refer you and recommend some folks to you as well. Our CPAs, they did get a 3-month extension. We all got a 3-month extension on filing our taxes. Instead of April 15th, they're now due July 15th. So even though they're busy right now, they do have some breathing room. Okay.
Mm-hmm.
All right. A few other things here to go through are the IRA 401k distributions. This is very interesting. You can now withdraw up to $100,000 out of your IRA or 401k if you need it. All right. You're exempt from the 10% penalty that you get. So this is for people that are 59 and a half or younger. Okay. If you're over 59 and a half, you can just withdraw from your IRA as well. But if you're younger than that, you don't have to deal with the penalty. Okay. You can either pay it back over 3 years, right? So you can actually pay that back over a 3-year period and not pay taxes on it. If you choose not to pay it back, if you're like, no, I need this money and we're going to go spend it, well, then that is taxable income to you, but you can spread it out over 3 years. Okay. So if you take $60,000 out, well, you can just say, well, I'll just put 20,000 and towards my income over the next 3 years. So it's just a way for you to tap into those funds if you need them as well. Okay. Any questions around that?
No, that's a great benefit though. And in this case, it would be saving about $10,000 in penalties for the early withdrawal. So
Right.
That's huge for someone who maybe doesn't have that many liquid assets in an emergency fund, but they do have an IRA. So that can help a lot of people out.
And not only that, being able to pay it back over 3 years, what that gives you is you don't get bumped into a potentially higher tax bracket or something like that for the year that you take it out. So
Sure.
It's good stuff. Okay, so who qualifies for this? Well, first of all, either you, a spouse, or dependent needs to be diagnosed with COVID-19, okay? Or you have to have been experiencing adverse financial consequences as a result of being quarantined, laid off, hours reduced, furloughed, whatever. You've got to be impacted. You can't just go in your IRA and pull money out. There has to be a reason why. Maybe you've been able to work due to lack of childcare. You own a business that is closed, or now you're operating on reduced hours. A lot of restaurants and service industries dealing with that. Or you meet some other reason deemed okay by the IRS. So again, this gets us back to what we were saying earlier. You will want to consult your CPA and your tax advisor about this. But all we're trying to do is just get something out in front of you, just get you informed, and then point you in the right direction when you go make a decision there.
Absolutely.
This one's pretty straightforward. Unemployment benefits, basically, you get your regular unemployment compensation, except it's bumped by $600 a week, and your benefits extended by 13 weeks. So if you file for unemployment, you're going to get a $600 a week bump. And also your benefit is available the first week of unemployment instead of having to wait the week is there. So pretty straightforward. We're not an unemployment specialist by any means. You'll want to contact your unemployment office as well. All right, just a couple other provisions here, and we'll wrap this up. No RMDs for 2020. What's an RMD? It's a required minimum distribution that comes out of your IRA, and this is really for people that are over the age of 70. The IRS requires them to take money out of their IRA account. Well, they don't have to do it this year if they don't want to. So, and if you've taken the money out already, you can actually put it back in if you don't need it. And so you can defer that distribution this year. Another interesting thing as well, student loan repayments are deferred until September 30th, 2020. So you don't have to make any payments on your loans till then. Another interesting thing, in reading up on this, I didn't realize, but I guess some companies actually pay their employees student loans as part of their compensation package. However, to the employee, it's counted as income, right? Because it is compensation to them. However, part of this provision, you can pay up to $5,250 toward a student loan for one of your employees, and it's excluded from their income. So pretty interesting provision in there as well.
Yeah, when all is said and done, that's a pretty good benefit
Yeah.
For the employees for this year. So
Yeah. I mean, it basically allows them to take $5,000 in tax-free income. So that's something there as well. All right, two more here. This one is pretty straightforward, but I think it's very important. For those of you that file a standard deduction, you don't itemize your deduction. You just file the standard deduction and that's it. Well, you can't itemize, right, your charitable cash contributions. However, with this provision, I don't know where they came up with 300, but the number's $300. You can actually itemize an additional $300 in qualified charitable cash contributions. So if there is a nonprofit, and I can tell you what, I serve on the board of a few of them, nonprofits right now are struggling, okay? They are hurting. So if you feel so led, you can write a check for $300, and that's going to be tax-free, even if you just do the standard deduction as well. And speaking along those lines, they also removed the adjusted gross income limit for cash charitable contributions. So I think you were only allowed to contribute up to 50% of whatever your AGI is. Now you could contribute your whole salary if you wanted to charity and take the deduction as well. So pretty interesting stuff is there. So that brings us to a close. We wanted to keep this short and sweet, but at least just try to plant a seed and get some things out there for you to be thinking about. You can reach David or myself here at Parallel Financial. You got our number, our email address. Anything else, David?
No, I think, in addition to long-term investing and things like that in the quote normal world, now that we're in some crazy times, shoot us an email if you need some support or just some guidance. And there are a lot of things that we cannot control right now.
Right.
Individually, we cannot control the stock markets as much as we wish we could. But hey, let's use this as a time to get our financial basics maybe back in order as we're sitting at home quarantined, and let's all come out of this better. And I'm real big on charitable contributions. So if anybody can squeeze any charitable contributions out, that's where our country comes together is during times of crisis. So I enjoyed this. It was very informative, Brian, and hopefully we'll get some more details coming out in the coming weeks.
Sounds good. All right. Thanks, everyone, and we'll talk to you later.